What else we got? I know people on here have questions. I've seen them come through in chat. I just can't, or in Facebook. I just can't remember entirely what they were at this point. Okay, I see Ralph on the phone. Ralph, I know you had a question about supply zones, but I'm still a little foggy. Still a little foggy on what exactly you were asking around those. Do you want to expand a little bit? I didn't know if you wanted um, an explanation on what they are. I didn't know if you needed an additional explanation on how to draw them. I'm not entirely sure what you wanted in terms of expansion, but I'm happy to jump into some other stuff around them. If you want to let me know what it is you were looking for. John, you're not late. We're just giving folks a chance to ask questions. I got a bunch of requests to start this earlier so that people get questions out of the way before we jumped into actually doing the webinar, which, as I mentioned in Facebook, will be an extension of putting it all together stuff. But so you're not late by any means.
Okay, thanks.
I see. I don't know who to address because it says waiting for a name, but I'm looking to get in a trade at a fib retracement level. How do you know to get in at 61.8 instead of waiting for 78.6? So fibs are never the sole determining factor in entering a trade for me. I'm not going to enter just based around a 78.6 or 61.8 or 78.6. So right now we're at a 61.8. If I just had this on my chart, it wouldn't be enough. For me, I'm currently not in anything on this pair, but you can see that instead of here, where we just have the support and the 78 and the 61.8, down below we have a nice trend line and the 78.6. So for me, I'm not going to bank on it just taking off right there. I'm going to be safe, and I'm going to wait until potentially the test of this 78.6. We'll also have our most recent low is going to be just above, oh, I'm doing time level, sorry about that. Our most recent low is just above where the just above where that 78.6 and trend line is. So right around here is a much better entry for me than just relying on that. So to answer your question, it's not entirely dependent on the 61.8 versus the 78.6. It's what gives me the best confluence at that point in time. Do I usually get in a touch of a pre-pan level or wait for confirmation? I usually get in at the test of my levels. I don't take a ton of trades. It may seem like I do, but that's because I'm waiting for certain things on every time frame. So um, I'm not one to wait for a daily candle to close to figure out if I'm going to enter. As I was just talking about here, had everything, or if and when everything does line up and I get a test of this 78.6, I'm most likely going to enter long immediately. So it's not I don't sit and wait for confirmation. Chris, do I leave my charts marked up and return to them for intraday trading, or do I start fresh markup when you return to a pair? So that's a question, and it kind of ties in with how you clean up your charts for intraday trading after you've gone through and marked up everything. And that's actually something that we're going to cover in this process of marking up in extending on the putting it all together stuff. So that'll get answered as we move through the webinar, and you'll see kind of my thought process and how I go through planning and making sure that everything's clean and simple, because you don't want an overcrowded chart, and you don't want to handcuff yourself to looking at something that looks like a video game. When I'm doing a spread, is there any time you wouldn't use a daily? Best time for spreads in general? So if I'm trading Nadex, I'm trading binaries. If I'm trading for movement, I'm trading spot forex and futures. So I can't speak to daily versus 2-hour spreads. It really determines when I did and in the few times that I have. It really boils down to the same thing that the same entry criteria you'd have for a binary. So if you're looking at a 15-minute chart, right? And let's use value area for example. So when you're looking at Sean's value area and you've got a 15-minute chart that you're looking at, and you've got like today, for instance, where the plus 0.5 was right smack dab in the maybe like 5 or 6 points above VA low. Well, if you entered into value area low and you had a 15-minute chart and there was a 2-hour spread that started fresh at it was maybe 10 minutes in, you don't need to give yourself a daily to get all the way up to that 0.5, because it's not a super extended target. Value area today was huge. So if there was a good bit of resistance, or sorry, not resistance, if there was no resistance in the middle of it, no deviations in the middle of it, and you want it to spread it the whole way up, then you want to give yourself the time. So it really depends on your target, James. Sometimes I find my levels maybe a few pipettes off, or micro. I think technically it's micro pips. Not that it really matters. Like 1.0510 instead of 1.0505, and then I'll miss the entry waiting on the touch. Does this happen to you? And if so, how do you compensate if possible? It depends on what you're trading. So with Nadex, because I'm typically waiting for it to get around that area and then get above or below it with an in the money, or if I'm trading for movement and I'm going to go with an out of the money binary, it doesn't matter a whole lot for me, and I don't try and compensate for it. With spot forex, because of the inherent spread with spot forex, I always account for it. So I always place an order, roughly 2 or 3 pips before a level anyways. So I typically I try and be pretty exact, and I try, as I go down to smaller time frames from a higher time frame, I try and make sure that my markup is clear and is connected to the right point. So I try not to, I try not to pick, first of all, pick levels. Like if you watch the response I had to Adam's question yesterday, that trend line that he had on the lower trend line that was an uptrend, that can really be interpreted so many different ways, and it can be drawn so many different ways. So that when you're picking obvious trend lines, it's not going to matter a whole lot, if that makes sense. It's when you try and get really fine and really cute with it that it becomes a problem. When trading forex, you have targets and/or use trailing stops. I trail my stops based around structure. So same thing for entries, right? So if we get a strong bear move down and I'm going to hold, and I'm planning on holding for a larger target like a supply or demand zone, then I'll pull out my fibs and find support and resistance kind of in the middle of where price is, and trail my stop above or below that level and just kind of use it as protection. So it's almost like you're giving yourself another strike on Nadex. What leverage do you use on spot forex? 1 to 50. That's the CFTC regulated leverage. So if you're trading in the U.S. with any regulated broker, then you're going to be at 1 to 50. Good questions. Keep them coming. We've got another, between 10 to 15 minutes before I'm going to start with the actual webinar. So feel free to keep asking away. What mobile app do I use for spot forex? I execute all of my trades off of MetaTrader 4. And I realize I just sounds like I was straight out of Boston. MetaTrader 4, not MetaTrader. It's really the only app that I use to execute forex. Do I have some kind of news feed or ticker that I look at during the day to stay up to date with everything that's going on in the world? No. I look at Forex Factory in the morning and my FXbook calendar, and that's it. I am aware of all the news that's happening throughout the day, but I don't pay attention to the intraday live squawk or anything because it's just noise. And unless it's something like a presidential press conference or an ECB press conference, and it really doesn't make a huge difference. Since I'm a technical trader and I trade specifically off of levels, then it's not super important to me to keep like a rand squawk or a live squawk up. What are my chart settings? I open up a chart and it looks like Sean's. Jesse, I'll make a video about saving off. So when you open up, I'll share. So what I'm planning on doing is I'll share a workspace with what we mark up today on. I'm going to do it on the dollar yen. So I'll share a workspace on that, and then at the end of this, I'll show you how to save off the chart settings in a styling format, and you can just apply it over. Because like right now, if I were to go through, find it, style, I can load up Sean styling, or I can sneak back to. That's not what I wanted. Go back to mine. So I'll show you how to save that off out of the workspace that I share at the end of this. Roughly another 14 minutes before we get started on the actual webinar. Anything that want a little bit deeper explanation on before we get started? More than happy to jump in. Sorry, I'm just cleaning up my chart. Apparently I hadn't saved off no grids, and I don't like having grids. I like it a little bit cleaner. Right, so let's see. I think I got a couple that came through. For connecting trend lines and support and resistance, they need to be wick to wick. Does it need to be exact same level? I do wick to wick. And when I'm doing trend lines, I do wick to wick on the first 2 points that I'm connecting. Likewise with support and resistance. You can do, for support and resistance is a little more lenient. It almost becomes a supply and demand zone if you just kind of generalize the level. That's perfectly fine, especially if you're trading, higher time frames and you're giving yourself the wiggle room that you have with a deeper in the money strike. With trend lines, I try and be exact as possible. I had a quicker moving average on my chart some time ago. What happened to it? I don't actually use any of the EMAs. I really don't know why they're still on my chart in general. Any of them, the 50, the 200, and I think you're right. I think it was an 11 or a 12, but I just don't use it. It's not relevant to my trading, so I got rid of it. Do I ever use Heiken Ashi candles? Biggest disadvantage? I don't use Heiken Ashi candles, and I don't use them because they're averaged candles. So when I trade, a lot of the time I'll make an entry on a 4-hour chart or an hour chart, and it'll be mid-candle. With traditional candles, I can see the price movement as it's happening. With Heiken Ashi, because it's smooth and because it's an averaged candle, then it doesn't provide like the wicks and the actual candle movement isn't as finite and isn't as tick oriented as a traditional candle, which I much prefer. And I've just traded traditional candles for 10 years now, so it's what I'm used to. They work really well for Sean's method, where you're looking for higher lows or lower highs on the 1-minute chart for confirmation. Because it's a wave, it's so much easier to read when you're inside a value area and or at a deviation and you're giving yourself that that higher low confirmation. But for me, as someone who I don't think I've opened a 1-minute chart or a 5-minute chart for that matter in roughly, I want to say like 5-6 years, it doesn't make that big of a difference. All right, so right around 10 minutes before I originally wanted to get started. You can keep some questions coming through, or I can just get going. It doesn't matter to me one way or the other. Given the amount of requests I had to start early, I'm actually not getting as many questions as I thought I was going to. How often do I take out of the money trades? Not too often, because usually, again, if I'm trading for movement, that it's going to be on spot forex or futures. I went through a string of posting a lot of out of the money trades because I got a lot of requests for or questions of people asking, well, how come I don't do it? How come I don't do it? Like, is it possible to do it? And I wanted to make, maybe 4 or 5 videos around taking out of the money trades to show that, when you pick your spots and you're able to pinpoint where market movement's going to happen, then yes, absolutely, you can leverage your money really well on Nadex. But I really only did that to, I really only did that to showcase that it is possible. I don't do it myself too often just because I am primarily a futures and forex trader. And, I mean, the obvious advantage to out of the money, John, is that you're risking a lot less, but it's not. I mean, it's really dependent on what style of trading you are and what your comfort level is. I know a lot of people will never take an out of the money contract because they don't feel comfortable taking profit early, and they won't. They like the cushion of knowing they're right when they enter the trade, or knowing that if the trade expired, then they would be in the money. It's I mean, again, the obvious advantage is that you're risking a lot less, but the disadvantage is that you're requiring the market to move in order to make money, whether it's enough movement to take profit or enough movement to fill your out of the money strike. It's really, it depends on what type of trader you are. Jesse, I only trade in 8x. Could you explain how to enter a 4x trade? It's not any different, really. I mean, the 4x trade, you're just on a different broker. You select buy at market, and then your trade is executed. I open with a 20 pip stop loss, and I have a profit target set up ahead, or I just trail my stops as I'm rolling. But the entry of it is quite literally the same. It's just a matter of how long I want to hold. So as price tests my level, if I were trading on Nadex, then I would grab it. So let's say that I had, move this out of the way for a second. Let's say that I had a price level, I don't know, let's say here, and this was extending from way back. Price came up here. If I were entering a spot forex trade and I had this marked off as my entry, then I'd enter at the test of the level. Have my stop somewhere up around, let's see, what's that, 125.94, so 126.14 roughly be my stop, and then just sit tight and ride it out just as I would a Nadex trade. It's really no different. It's just a matter of identifying how long you want to hold. Small confusion looking at this chart exactly right now. The fib rotation can be used from the low to the high, from that high to the new low. Which one is right, or can both be right? I'm a bit confused. Are you saying that, well, let me see. You're saying that if you did fib from here to here, that's correct, and then also from here to here, that's correct. Which one's right? Junior, is that what you're getting at? So both can be right? So they're not incorrect moves, right? You've got your bear move down off of these identified highs, and then it retraces back nicely to the 78.6, or in between the 78.6 and the 61.8. It's just a matter of where you're looking to trade, right? So this one, had you been looking for a retracement and a pullback off of this bull move, and you had a bullish bias and you wanted to run it up, then entry right here, absolutely, right off of the 50% retracement. Let's get rid of this for a second. So now let's say I'm a spot forex trader and I have a swing trade account and I have a scalping account. So so we get this run up, and then we start to come back. You've identified this 50% retracement as your long position, so you hit it, take a long position. Now you can do one of two things. You can identify how long you want to hold, and hold it until you get a retracement off of this bear move down that retraced back. If you still hold a bear bias, then you can enter again at the 78.6 or the 61.8, and then you can go even further and then fib that too, and then this 50% retracement, or better yet, the 61.8 or the 78.6, because we have structure around that level, they're all valid. It's just a matter of how long you want to trade, what your overall bias is, and what your overall goal for the trade is. All right, let me scroll back up. In the money binaries, do I look to cut losses? I know where my strike is. I cut losses if and when it tests my strike. If I'm doing it in the money binary, I don't sit there and watch P&L ever. But typically I never over leverage myself on Nadex for more than I'm willing to lose. So even if I lose, it's not, I mean, that's my stop loss. That's even if I lose completely and the whole binary is gone, and the binary finishes out of the money completely. If you're, I mean, without bragging or sounding cocky, my win percentage is high enough that it doesn't matter too much. But if you are in, like, let's say that your strike was 130 on this and price came up and you entered at, I don't know, you bought it at like $28, you know that when it hits 130, then you're at roughly $50. Or the binary is worth $50, so you're probably $22 in the negative. That's not a bad spot to cut your losses. It's the cost risk difference between Nadex and Spot Forex. That's something we'll get into later in some of the other webinars once people, because I really encourage you until you figure out how to, or while you're learning and while you're digesting, stick with Nadex because it's so much easier to predict where the market's not going to go off these levels than where it is going to go. So once we get into, once you've gotten better at that, John, then we'll get into, the risk differential. All right, so we get 2 minutes. Junior, no problem. Got 2 minutes until we get started. Great questions so far. I'll take a couple more quick ones while we let more people jump on. Let's see what we've got so far. We've got 22. I'm more than happy to take a couple of questions, or we're right at that time, so I'm happy to jump in. So I'll give it 2 minutes, and if I don't see any come through, then I'll just start going through the webinar. All right, I'm not seeing any come through, which is good because it's perfect timing. So I'm going to jump into essentially an extension of the putting it all together videos at the end. So there should be 3 at the end of the Forex course. And I wanted to do it live so that you had a chance to ask questions as I was going through. Excuse me. And I can see chat bubbles come up on the top of my screen here. So as I'm going through, if you do have questions, then let me know. I'll stop and I'll address it. But really what I wanted to do was I've gotten a bunch of questions on how do I mark up from a higher time frame down and leave it so that when I'm trading intraday, it's not a mess and it still makes sense for what you're doing. And how do you revert back to charts that you've had that are higher time frame that you've had marked up for a while. And additionally, how do you take advantage of what you do have marked up, and how do you make that? How do you plan for the type of trade you want to take, and how do you identify what strike is best for you there? So a couple of those questions are entirely personal, like what type of strike is best for you. While there's some merit to a rigid answer with it, there's also the personal answer, which is what are you comfortable risking, what are you comfortable holding, how much capital are you going to tie up in a weekly, things like that. But we'll dive into that too on how you can plan for every opportunity. So I'm just going to go ahead and start marking up this chart, and again, feel free to ask questions as we're going through. But I'm really just going to start applying what I've covered in the putting it all together section of the Forex training. And if you haven't gotten there, this is more or less what you can expect. And with the exception of this, you'll get live the opportunity to ask questions live. But if it doesn't make sense to you, don't worry. This is going to be recorded, and you can always come back to it after you've gotten and gone through. So firstly, this is a monthly chart. So I've seen people go through and just start to build out their entire trading plan and their entire ladder off of a monthly chart. And when you do that, it really, I'm replicating some of charts that I've gotten sent in the past, just by identifying way too many levels on a monthly. Now, obviously I see what you're trying to do when you send me stuff like this, and I appreciate that you're trying to build out your ladder, but the purpose of what you're doing on the monthly and the purpose of marking up your charts in general is to find the obvious. Sean's really good at explaining that trend lines and fibs and things of that nature are, they work because they're self-fulfilling prophecies. Well, they're only self-fulfilling prophecies if other people have it. So by marking off every single one of those levels, you're really doing yourself a disservice in that you're not just marking off the obvious. So for me, when I'm looking at the monthly, I'm looking at boundaries. I'm looking at things that jump out to me, like this trend line here. We've already had our anchored low, and we've already tested this level right here a bunch of times. So that's valid to me. And clearly, this level was valid to other people. This level right here worked out great to establish this trend line because you've got support that held really nicely right around here. But I don't need to do any more than this on the monthly. And so because of this, I don't necessarily need to keep this as markup, but just to give you an example of what it is that I do to help organize myself and help keep this stuff cleared is I'll just, this little what is it, like a 6-pane table or something just below on demand. If you do share flexible grid, you give yourself the option to share off that link with yourself, and then I just come into Notepad, monthly 6/17, and I'll just use this as a baseline. And so from here henceforth and here forward, I can go back and I can reference this. And the deeper we get, the more the more levels we have on there, the more planned out we are. This is going to become filled with maybe 8, 10 different options. But is that easier than saving off a workspace, or is it essentially the same? When you're saving off a workspace, so the reason I do it this way is because I'm not doing this with just one chart. So what we're going to run through, and I'll have a workspace of just the dollar-yen, but because I'm doing this with, at times 20 to 30 pairs, commodities, futures, it becomes cumbersome to have that as one workspace. So I'm not necessarily using this as a workspace replacement, just as a guideline for me in the future. So from here, because I have this markup, right, because I have this stuff already planned out, I'm now going to detach so that I don't necessarily have to mark up a clean chart and just have one chart to rely on, but instead now I can dive down to a weekly chart and start to plot out some more levels. And one thing that I'll do is I'll change my coloring now. So because now we're on a weekly, I know that, and I don't have a legend, I really should. I should have a standard set that I do every time, but I'll go through now and I'll just identify that this, topmost one here, this is a monthly. Sorry, my typing is not the best right now. So I'll identify that everything in orange is a monthly. And I can go through and I'll change this to orange as well, because now my trend, I know that these are monthly trend lines. And I do that because as you're looking at your charts, and as things get a little bit more finite and a little bit more granular on lower time frames, you still want those important levels there. You still want those higher time frame levels there, especially when they're super relevant, and they become relevant in the immediacy of your trading. So now I'll go through and I will change the color on let's do red for weekly. Actually, I like red for daily, so let's do green for a weekly, and I'm going to save this as default. So now every time I mark off something on this chart, it's going to be green. So I'll go through and support, and all I'm doing is just support and resistance and building out, as I had discussed in the in the course. Now I'm just building out a ladder, and I'm giving myself options. So as we zoom in now, we've got, and notice how I'm not overdoing it. I'm not hitting every single level. I'm hitting important levels. You know, this was established once, twice, 3 times, 4 times before it was finally broken. This one was once, twice, 3 times, 4 times. So everything that I'm doing has merit and has validity to it. So once, twice, 3 times, technically a 4th time, I guess, 5th time. So everything that I'm marking off has a reason behind it. It's not just completely overwhelming myself. And now I would go through and shear off weekly 4, 6, 17. Sorry about that again. All I'm trying to do is tell myself that I have no planned trades on this one. It's just general markup. And if I go back to my chart, so now, yeah, Vasco, I've been at it quite a while. It's working on Thinkorswim is like second nature to me. So now I'm going to go through and now I can start to plan out some trades, right? So I've got a good level right here. Notice how far in advance I can give myself an edge. So we've got the 78.6 right here. We've got another resistance level right here. We've got the 61.8. And we've got another support level that kind of, you know, or technically it was resistance at the time, but that worked out in the past that I didn't have marked off. So now, if I'm looking for an in the money, this is probably, see, these are all weekly candles, so that's probably 1, 2, 3, 4, 5, maybe 6 weeks ahead of time. I can be sitting here waiting for this every every week, and so I can plot this out. So now I can, start this off. If I do this in Excel, then I can highlight this as a, so I'm planning out my trades. And so now I know that this has importance. And so I can, I can go as far as at times I've had an Excel document that has every level in it, and every level of importance had a different color. Now it just becomes so second nature to me that I don't need to get to that, that level. Nevaska, I wouldn't say that it's technically in an uptrend until we test this area right here and verify that we're going to take off. Because right now, if you look at market sentiment, right now we're technically in a downtrend. So this is where I really I don't like to label it, because you have to interpret the market sentiment for not only that particular moment. So right now we've got a nice bull run up. So here it was in an uptrend. Now it's in a downward range. If we test this level, then yes, again, we're going to be in an uptrend. If we test and respect that level. If we test, break, and then head down to that 161.8, then we're in a downtrend. So it's really about interpreting market sentiment at the time. So moving forward, now I don't have to, I already have this chart marked up, right? So I can take this off, or I already have this chart saved off, so I can take this off, and I don't need to keep all of that on my chart, because at any given time I can come back here and know that I have, it's a week and a half from now. Oh, check this every week until the levels are tested. Even if you don't remember, it's a quick refresh, and then, oh, okay, yeah, it comes back to me now. So now let's say price is right around here. Still not ready, but it's getting closer. So now we can go down to a daily. Since we've gotten our opportunities on, or our one opportunity that was really apparent on the weekly. And now we can start to plot out opportunities on the daily. So we've got a nice little wedge going down. We've gotten nice level of, and I like red for the daily for some reason because the daily is kind of where I base a lot of my decisions off of. So, oh, and I meant to change that. Excuse me. Let's give myself a little legend. And so now everything that I'm going to be doing on this chart is, you know, it's on the daily. Saw a question come through. The wick on the bull trend, how'd I pick that? Did it just line up right? I'm not entirely sure. I'm not entirely sure I understand the question. Left-hand side. Oh, wait, sorry, did you say the uptrend or the downtrend? On the bull trend. So the overall weekly uptrend that we have? This one? No. Sorry, I'm not entirely sure. Where are you looking? The small wedge downward. Oh, okay, gotcha. So you're asking, how did I pick this? This right here? Well, if you notice, as we're moving up, you know, before price really took off, before price really just kind of made its last little kiss there and then took off, you have this little level of consolidation. And actually, I'll just highlight it like this. You have this little level of consolidation, and the last test of that lower area was right here. So before it made its big bull run up, that was its last little, you know, bear push down. Because, you know, then we hit another level of consolidation, but sorry for the mess there. The one that really broke this area was initiated right here. So that's why I chose that level, is because that was kind of its jumping off point from breaking out of this little consolidation here. So if I just go back to, I've got a pretty good ladder built out, so I don't necessarily need to add too much more because, again, I'm not trying to overcrowd anything. But I can add, you know, some more that are relevant, so you can see that that was established here and then tested again here. So that's, you know, worth keeping on my chart here. That's worth keeping on my chart because it was respected a couple of times. Likewise here, because that was kind of, once it broke through, that was its retest point. So, but I don't need to overdo it now. I don't really need to continue to hammer down on my chart and just overwhelm it. You know, here it was a really good, that was a good jumping off point. But it was, you know, it was only tested once really and respected once before it was slashed through a bunch of times. So I'm not even going to leave that on there. And even, let's get a little bit more immediate. So now I can take this level, and now I've got a really good baseline for, and I'll take this one too. That technically I guess I could have done on the 4 hour, but I've gotten so akin to seeing that type of stuff. Like if we go down to the hourly or the 4 hour, you can see where I was getting that level from. More specifically the 4 hour, nice little double bottom there, but I've just gotten so akin to seeing it on the daily that it kind of jumped out at me. But now we've got, you know, now we've got a lot in this one little area, and this one little area still being a pretty good section on the daily. So now I go through and share that. And I'm just doing this to I'm not, giving it the appropriate description on each one. You can describe it however it appeals to you, however it makes sense to you. I just want to give you a general idea of how to, how to keep everything clean. Can I show you how to save off the, oh, I got another one that superseded that, sorry. Navaska, sorry, no worries. Can I show you how to save the chart like that, just a little slower? Sure. So underneath on demand, there's a little grid. There's a little, it's like a six-tabled grid, and if you click that, it's just so it's in between on demand and patterns. If you click that, you have options to save flexible grid as or share flexible grid. When you do share flexible grid, it's going to give you an option to share off a link. When you click share, it'll automatically copy, and you can paste it anywhere. So once you can see it just says press Control V to paste it. So that's all you have to do is just little grid, share, and then you're good. No problem. After you set your ladder, do you say the weekly levels to trade the daily and the daily to trade the 4-hour time frame? You can use that, honestly. So the beauty of it and the reason that so you'll see in a minute, we'll get into that in a minute, Junior. You'll be able to see how things like daily, how weekly, and how monthly can even become important on an hourly trade. So you can use it all, right? For instance, so we're on, and I don't want to spend too much time going back and doing past trades, but instead show you how to plan out future trades. But this is a really good example. So if we look at this level right here, so this green is a weekly trade, or is a weekly trend line, support level. Excuse me, it's been a long couple of days. We take our fib tool and we map out this bear move down. You can see that we've got just above it, we've got a nice 61.8. Just below it, we've got a 50% retracement, and we've got this trend line wouldn't have been here yet. So we can get rid of that trend line, and even with that weekly, as we come up and test it, right? If let's say that this happened at, let's say that this spike up happened at roughly 6:30 in the morning Eastern. And there was the opportunity on the daily to get a strike up above the 61.8 for decent money. So let's say it was like a $23, you were going to risk 77, and it was a $23 in the money up above that 61.8. You can use a daily for a daily. Or you can use a weekly level for a daily. And likewise, I can use a daily for a 2-hour. So it's really all dependent on how everything lines up in that point in time. It doesn't necessarily have to be so rigid in terms of, oh, I have to use a weekly markup for a weekly trade, and I have to use a daily markup for a daily trade. It doesn't have to be that rigid. You can really work with it. And now that we've gotten this saved off, I can detach it and start to clean up only what's relevant to me. So because I didn't really mark up too much in terms of the daily, because we're kind of in an interesting spot right now down here, because there's not much around me, I can go down to the 4-hour now, because I don't see a whole lot on my daily that jumps out as a valid trade right now. We're at the negative 23.6. So it completed, for a short-term completion right around this level. We've got another level at the negative 61.8 that lines up pretty well with a support level, but we're not anywhere near there. So I could again save this off, and I probably wouldn't just save this because of adding another level, but it's still worth, if that's the type of trader you are, it's still worth daily added fib completions. So another question. Yeah, so absolutely. Right now, like this is all I'm doing now is just giving myself a plan for, I'm not saying anything, definite. Um, I'm not saying I would enter, at the test of this level right here. Just like for instance, again, I don't really want to go back, but this trend line really, here there would have been nothing here. This had to establish itself. This was structure that had to establish itself. And as it established itself, it gave me the option to form this trend line and this resistance level and find a pullback. So before this level was established, I would have had nothing to base these trades around. But because I was able to formulate the trend line, the pullback, which gave me the negative 23.6, and I had a strong support level there, now when I test here, that's a valid trade because I have a lot of confluence around that area. And as we come back down and test again, we didn't quite make it, but that's still valid too. But you need to wait for the market to kind of show its cards and then capitalize on it. You don't want to be, and this is something that I try and remind myself of all the time is I don't want to try and be a predictive trader. I want to react to what the market's showing me. It's not worth it to try and sit here and say, oh yeah, market's definitely going to go down to this negative 61.8. I'm just going to enter at market now and write it down. No, that's how a lot of people blow their accounts. You want to be precise and you want to know exactly where the market's going to pull back to, and then be prepared for the ifs. So the other option that I had there, right, is if there wasn't enough confluence here. So let's say I didn't have this level. I'm not going to get rid of it because I want to keep it. But let's say I didn't have this level and instead we just blew straight through here. Well, on the bull run, we could fib, let's say it ran down to here, but it didn't quite complete down to this level. Well, we could fib from where it started as bull run down and find a retracement, and sure enough, the retracement would probably happen somewhere right around this resistance level and the trend line. So as price came back up here, now we have confluence for a short on a lower time frame. So now we have confluence for a short on, say, an hourly time frame or a 4-hour or even a 30-minute. So you just want to give yourself levels to be prepared for any option. I hope that helps. So now that we've gotten our 4-hour or our daily marked up here, and do I have another chart? No, I didn't detach off of this one. So I want to leave this marked up. I'll detach again and I'll have another, give myself another daily where I'm going to take off this because I want to capitalize on the range that it's in right here. So I like this level a lot because it's immediate and it's in the short term. So you can see it was tested, it was tested, it was broken, it was tested, and then it fell. So I want to keep that level there because in the short term it's meant something to the market. Now if we grab our fib tool and we fib the range as a whole, well, now we've got something really interesting. Now we've gotten this level right here. I'm doing that to connect the 78.6 and the 61.8. Anywhere in between that level, we've got some confluence. So as price maybe makes a run back up like this, if we can test the 61.8 and we can test the trend line and that resistance level, now maybe we have an option to do something like that and go back down and complete that negative 23.6. But now you've got options for a lot of different things. Now we've got options to come back up and retest this level. And this is going to be really scrunched, and I apologize for that. But if we were to map out from here up, you can see that we're kind of trading back down into structure if we top out here. So we're kind of trading back down into structure. So that would be good. Our end goal is to get up here. So now we might have a long entry somewhere right around here to ride it up like we planned. You don't have to take that trade, but again, you're giving yourself options. But really, now if I just mark off something like that, well, that's a pretty good path to keep in your mind. And then that's definitely, a valid, you could see a hard fall because the yen pairs like to move quick. just something like this. You'd see a hard fall off of that level because it's a perfect retracement back into an area of great confluence. So now I could do something like this. Grab yourself a screenshot and then save it off, right? So you've got, you've got a potential path for your dollar yen trade. Let's save this off. And so now you have the chart and the screenshot saved off. So now you don't have to worry about leaving that marked up. You don't have to worry about leaving this on your chart at all times. But now you can also detach, and I'm doing this so that I can give you this workspace afterwards. I would detach and then clean it up, but then as I moved on to another pair, I would really only keep the chart that's most immediate to me. So now I can clean off these areas and go down to a 4-hour chart. And so now things become a little bit more interesting on the 4-hour, because now we've got a nice little uptrend and a nice little downtrend. So now things become a little bit more immediate. That's not what I wanted. That is. So now we've gotten, and that lower trend line, I'm going to remove it. That's forcing it a little bit. It works, but it's forcing it a little bit. I don't necessarily want to keep something like that where it's too close to a lot of levels. But now we've gotten additional downtrend, and we have more options now. We take our fib tool. Now we've got some good confluence for a couple of things. And this is where preparation really comes into play, because you can start to give yourself a lot of options that you didn't know were, that you wouldn't normally have, because now we're in a short-term downtrend. We can come up, and this becomes an interesting area. And as we fall, we could either fall off of it, or let me change the coloring, or we could break through, come back and retest, and then we have a nice little path up to this 161.8, which is pretty perfect with some resistance. So now you've got another couple of paths that you could give yourself. And I'm just going to mark this off. And again, I'll go through, take a quick screenshot. So we've got two potential paths on the 4-hour. Save that off again, so I have that chart. Jumped the gun on that one a little bit. So I'm starting to build a portfolio of potential trades, and this is, from the weekly down, right? We're only on the 4-hour chart, and we've gotten 1, 2, 3, 4, 5, 6, 7, 8 potential trades off of the same pair. And if you can imagine, so this is, I don't take a ton of trades, but it might seem like I take a ton of trades because I'm doing this on every pair. So at any given point, you have, 40, 50 opportunities that you're sitting and waiting for. You don't have to force a trade. And when I say plan a trade and wait for it to come to you, this is all I'm doing. This is all I'm identifying. Question. The only reason that I didn't really like that 4-hour lower trend line is because if I connect the first 2 points where I really would like to connect the trend line, it just kind of slashes through in the middle of nowhere. It's not super obvious to someone. Now you can make an argument that if you want to start at the last point here, where it jumps off of the support, and then do something like that, well, that's fine, but I don't really need it because especially for this markup, right, for those two plans that were short biased, you know, I'm overcrowding my chart at this point. For something that, you know, my two plans were a short off of this level or a breakthrough and a retest and upwards on this level. There's nothing wrong with keeping it there at all. Just for the purposes of what I was getting at, I didn't want to overcrowd it. So now we've got a 4-hour chart marked up, and we can start to, and we've gotten our levels saved off and everything, so we can leave this and we can start to get down to the 1-hour chart and really start getting down into that intraday, you know, those important intraday levels. I'm actually gonna pan out a little bit because that's easier to read. So now if we take this, so now I've connected this level, these levels, and then we broke through and retested here, so I know it's valid. We came back up and retested here, and so now I've got another potential area right around here for an in the money. So if I grab that level and I take, we're a nice little channel here. You know, here I am saying that, you know, this became like second nature to me using Thinkorswim, and I can't zoom in. And we grab our short-term bear move down. Now I've got 61.8, 2 levels, and the 78.6, and a trend line cross. So now we've got an option for an hourly, a 2-hour binary. Once we come up and test these levels, now we've got an area of, that's a great short opportunity right up there. So we've got, you know, we've established one trend line, we've got another trend line, and we're getting another trend line. Everything's crossing right in the same area, great confluence. And so now take this, so now I can give it a little bit more urgency because it's an hourly trade, so it's going to fill sometime in the next couple hours, potentially. Or we've got levels to the upside too. It's not just to the downside, so we take this off and we can be prepared for, you know, a break, come back through and retest, and then we've got, you know, our first target and our second target up here. So first target, test the first target again. So now we've got options to the upside too. So we're able to give ourselves time to react, and we're able to be that reactive trader instead of trying to predict exactly where the market's going to go. And it's all off of the same chart. So I could again do something like that and take another screenshot. And then I could also go back in here and identify that so now we've got multiple options off of the same hourly level, so we can be prepared for any any path that it's going to take. And I'll usually stop with markups right around here on the 15 minute. Am I setting working orders? No, I don't set pending orders. I don't set working orders. If I can't enter manually, then I can't manage it right from the get-go, then I don't like not having that control. But that's also just a personal preference. But I'll usually stop marking up my chart in terms of levels right around here, and now I can use the 15-minute levels to gauge. So now I can start to, if I throw on, let's just add the study set. So now we incorporate the stock, and see on the hourly, what's that look like? So now as we come up, you can see that the stock's kind of in the middle. So as we're testing this area, the momentum might be ready to turn over. And what would be great is if we could spike up to this level and we could start to see some divergence. So if we could spike up to here, and you notice that price would do that, but say that we could get momentum to kind of do that and be right at this point when it spikes up here, that'd be great, because then momentum's ready to roll over and divergence is kind of pulling price down. But that's not something that I want to get into too far today, because that's a more complex topic, so I want to talk about that when we have a little bit more time. And when we have, when more people have had a chance to go through the course. Now, the other option that I see looking at the lower time frames, right, if we were to go down to the 15-minute time frame, well, this isn't anything that's invalid. I don't typically like to mark off the 15-minute chart, but this is certainly valid. And if we were to take our retracement, so now coming back down around this area on the 15-minute, if we continue down, getting a binary down below here, and then at least going for a short spike off of here, that's also valid. Now it's a 15-minute setup, so I wouldn't necessarily mark it off and say you need to watch it every hour until it fills, because 15 minutes one spike could bring it down there. But it's again valid, and there's nothing wrong with it. So when I'm marking out my charts and when I'm applying everything that I've covered in the Forex course, this is what I'm doing, and this is real-time analysis. This is real-time application, and this is how it's meant to be applied. You're supposed to be giving yourself options. This is what I want is for you to take a look at the bigger market picture and then whittle down and find the opportunities and find every potential path, but don't overwhelm yourself at the same time. And it's a tough balance. It's a really tough balance. It's become easier for me over the years. I mean, I've been doing it for 10 years, but it's so the moving averages, as I don't know if you were on Navasio when Oscar asked a question about the moving averages. I don't really use them all that much. I leave them on my chart just, if it does happen to line up with like a 200 moving average does happen to line up with an area of confluence. Like if we were to get a 200 moving average that came through like that, the price came down here, then that's that's additional confirmation, yeah, but I don't really use them too much at all, if at all. So in terms of the markup and in terms of the application of what you've gone through for the Forex course so far, if you haven't gone through that yet, what you will go through, this should give you a better grasp on how it's meant to be applied and how I apply it. Now, with that said, I opened up the webinar with questions around, with just basic questions. I'm going to close out or leave some time now for questions around what I did, questions around what we covered in the application of the course knowledge. So feel free to ask away. Feel free to ask anything. I know a couple of you jumped in with questions during, but this is a good opportunity when it's fresh in your minds to, if something doesn't make sense in the course that this rekindled, ask away. If there's something in that was it peaked while you were listening and while you were watching me mark up the charts, ask away. But my plan is, originally I had said 4 hours, 4 webinars. Now, I don't want to cap it at just 4 webinars. I want to do shorter webinars like this where it's not overwhelming you with information, and we can address different questions and different pairs and different real-time analysis every time. Because unlike Sean's options course, which is the same principles that are very consistent, Forex is applying the same principles in a much different environment every time you're looking at the charts. John, my analysis is constant. I start with the weekly, the monthly, and the daily on Sunday night, and I run through it every single day. I'm reanalyzing every single, it's a constant. It's never, so I'm always planning out my trades. No matter, because I could see something that I don't necessarily see before. You could see that I could cycle through charts very quickly, and I can cycle through multiple pairs very quickly. But I also want to make sure that I'm giving myself the appropriate, opportunities and identifying every single one of them. So it does. How many tools do I need to line up before identify it as a great setup? I won't enter a trade unless I have 3 or 4 things that line up and say, it's valid. Usually, like 3 is my tipping point. If I just have support and a Fibonacci, I won't enter. I need something else that gives me that confidence. Are there any that I won't trade without? No, it can be any combination. Like it could be trend, Fibonacci, a stochastic. It could be support, Fibonacci, and a stochastic. It could be support, trend, and a stochastic. It could be support, trend, and a Fibonacci with the stochastic in the middle of nowhere. It really doesn't matter. It's just some combination of, like, it could be support in the middle of a demand zone on an uptrend. It's really just a combination of 3 things to give me that confidence. Doesn't matter what it is. How do I know how long of a binary to take based off of what time frame? How do I determine that? Again, it's really all dependent on the personality of the trader. So for me, looking at this chart, right, there's a 15-minute chart. If we were to get a bounce down here, it's whatever gives me the best strike and price combination. So obviously, I wouldn't be looking for a weekly down here. But if it was, mid-afternoon or early afternoon, and there was a daily that had a better strike price combination than a 2-hour binary, but it was maybe, but it was like an hour and a half out instead of the full 2 hours for the other binary, or an hour and 15 minutes out, then maybe I'd grab that. If I had done this analysis on a higher time frame and this was early in the morning and I was looking to take, we had already bounced off of here and we're retesting here, and I wanted to take an out of the money, took an out of the money at, that level right there, then maybe I'd grab a daily to give myself the time to get up there. So it's really dependent on what type of trader you are and what your comfort level is. But you don't want to be taking like dailies and weeklies off of 15-minute charts, 15-minute chart markups. But as we kind of talked about earlier, you could even take, if it's a couple of weekly levels and a daily level that line up really well, you could take a really short-term binary off of it if the strike and price combination is right. Trade management question. Let's say your levels have been run through. Do you then look for a break and retest play? What do you choose? When do you choose to do the break and retest trade? Well, so if we break and retest, right, the only way I'll enter is if I have that, it's a new trade. It's a new setup. It's, so if I don't establish any structure, if I don't have a nice retracement back to those levels, and it's just, I need those same 3 things. If I get those same three things and I have it pre-planned like I did with a break and retest and a run up to the 161.8, yeah, absolutely, I'll enter. But if it's not anything, if I don't have the confidence in it and I don't have the structure that's formed and the levels that have formed to give me that confidence to enter a break and retest, then no, it's not worth it. There are better opportunities out there. Do I ever have to skip trades because Nadex strikes are not favorable? I've noticed on certain pairs is like that sometimes, like BAJ. Yep, absolutely. You could like especially when you get late in the day, and like maybe half of the Nadex pairs have like a 3 to 5 binary or a 2 to 4 binary, but the other but like AJ stop, or I can't remember if it's the Aussie yen or the Euro yen that stop at like 3 o'clock, and then you don't have any options until 7 o'clock expiry. So yeah, absolutely, you are handcuffed a little bit. Yeah, Asian session can be tough when it comes to that. I've noticed that most of the dollar pairs are pretty good about having 2-hour binaries all the time. And I think the Euro yen is the one that has 2-hour binaries between the Euro yen and the Aussie yen. Do I look at patterns like double tops and bottom, head and shoulders? Not really, because it's still my levels lining up. So like a double top, like this would technically be a double top, right? Let's say this was a higher time frame. Let's say this was like an hourly time frame and we had this level. I mean, I guess you could technically say I'm looking for a double top, but really I'm just looking at resistance in confluence with a great trend line. But so yes and no. But I don't ever, like a head and shoulders pattern, like I don't typically, I mean, they have merit, absolutely, because again, of the self-fulfilling prophecy, like thousands of traders convince themselves that a head and shoulders pattern is important and very necessary. So thousands of traders are going to capitalize on it and drive the market. But me personally, I typically don't trade patterns. Mm, John, I could. It kind of lines up with what Ben just asked about. London opens at 3, US is 9:30. One of the other session changeovers. I'll share a session changeover sheet in the Forex course, but I don't I don't limit it to like I don't trade the pound yen at specific times. I don't trade the euro dollar at specific times. If the setup's there, I'm gonna take it. Like I trade because I trade traditional futures. I trade the indices overnight too. Like I'll during the Globex session, like I'll take positions on the on the indices and commodities overnight too. So I don't typically trade a specific pair at a specific time. Um, the session changeovers, so there's New York that opens at 9:30, closes at 4:15. It's pretty dead until the Asian session opens up right around between 7 and 8 Eastern. Then that runs until I have to refresh my mind on the times exactly. But usually the only time I really truly step away and don't trade is between like 5 and 7 Eastern. And then I'm at least back on analyzing, and then usually in bed sleeping with like between midnight and 4 a.m. Eastern, and then back at it. So I don't trade London, but I don't limit myself to trading only when the changeovers happen. Yes, for the indices and commodities, I use the same principles. Absolutely. I don't know if you've seen my posts in BTG around my futures trade specifically, but when I post my markup, you'll see that I mark up my chart the exact same. If I miss my entry on a couple of pips, do I still look to get it on a pullback or just leave it alone and move on? Oh, sorry, Navaska. Yeah, I use the same principles. I trade everything the same way. And Oscar, I just move on. I don't if I miss a trade, then and I don't get my optimal entry, I'm not going to try and force it. There's plenty of other opportunities out there. And Navaska, I keep seeing your name come up. Am I saying it right? I don't want to keep saying it wrong if I'm Thinkorswim's not lagging if you have a live money account. Yeah, it's free to open. It's free to open live accounts. You don't have to fund it. So I would, because the paper money accounts are lagging by like 15 minutes, I think. So I would open a live money account. VA presents problematic probability. Have you had issues with that with structure? I still plot out value area and deviation levels myself, but I don't. I don't always leave them on. I'm always aware of them, but I don't always leave them on because they cloud my chart a little bit. But uh, John, I don't. I work full time as I'm a software engineer for a cybersecurity company. I have at work I have a setup with three monitors and a 13-inch laptop screen, and um, the only screen that I get to dedicate to trading is a 13-inch laptop screen. All my other one is dedicated to code and internal chats and testing the product. So uh, no, I don't have any special setup. I'm doing it all, and it's not even on because I'm in cybersecurity. It's not even on my laptop. It's actually on an AWS remote desktop instance that I've stood up, and I just sift through it that way. So I'm remote on a 13-inch laptop screen. I'm remoted into a AWS instance, and that's how I trade. Can I show how I set up all the pairs in Thinkorswim? So literally all I'll do is, so now that we've gotten all of these saved off, right, I have all these opportunities saved off, I just leave leave my main one up, and let's see, Aussie dollar. And at any given time, like I'll probably have detach. I usually have like one chart up, the most immediate like intraday chart for each pair. But this is literally my setup throughout the day, right? So I'll just do a quick markup on. I'm not going to start on the monthly. I'll start on the daily for Aussie, and actually I don't like that. And just kind of give you an idea of what my chart looks like, or what my day looks like in terms of what my computer monitor looks like. Does TOS eat my memory too? The beauty of running with AWS is that I can, and I'm using company resources for it, so I'm not paying for slamming it with a ton of memory. My company is. So I don't I don't have that problem because I can just allocate as much as I need to it. But yes, TOS is a memory hog when you get this many charts going. So I'm actually not going to go through and mark up all the charts, but really all I have is like I'll have one chart for each, or one Thinkorswim open for each commodity future index. Yeah, I can't use the grid setup on a 13-inch monitor. I can't use the grid setup because it's just so crowded. It's so small. And Navaska, one of the other so let's see. I'm trying to go back to your question. You asked if I could. I think you asked if I could show. I think you asked if I could show like how I'm using all these charts or what my chart setup looks like. One of the webinars that we do later, I'll go through and we'll do multiple pairs and we'll do how to manage multiple pairs because it's a bit more like it's one thing to run through one pair and just just plan out a bunch of trades there, but then once we've built a portfolio of trades on this, then it becomes a bit more difficult to juggle. But we'll go through we'll go through that in a separate webinar. And I use TradingView as well, just for a different perspective and a different view. So I juggle between TradingView and TOS. So I'm happy to go until it's like 7:30 now. That I don't want to overwhelm you guys with content. I want to kind of trickle this out as more and more people, digest the content and digest one thing at a time. So I'm not gonna keep running through different analysis, but also I'm happy to stay on like for another 15-20 minutes and answer questions as they come through. This is good. I'm happy you guys are asking, but I also don't want to overwhelm you. So I don't have any more content planned for tonight. I wanted to maybe get 40 minutes to an hour of uh, testing or trading or marking up. Yeah, John, I use Ninja. I use Ninja and Tradovate for futures, but I don't mark up on them. I just execute. It's like Tradovate and Ninja for me are essentially what MetaTrader 4 is. I just use it to execute trades. What time do you use to plot VA? 12 a.m. to 4 p.m. I just do it after market close, so I do it between like 4:30 and 5 Eastern. No problem, Ben. And this is recorded, so I'll post this in the chat. There's a study that does VA plots. Yeah, it's volume profile. So if you do volume profile, it'll give you, like, you still have to outline it though, like, and I think Sean has a training on it. You still have to outline. Navaska, it's value area. It's something that Sean does with BTG. John, for beginners, the only thing I can say about, I can't recommend pairs for beginners because everybody gets a different groove and everybody trade the setup. Don't trade the pairs. Don't handcuff yourself. Trade what's there for the setup. But what I will say is be careful of UCAD and the pound yen, each for different reasons. So the pound yen, because it moves a lot. It moves very, very fast, and it covers a lot of pips in a short amount of time. The UCAD, especially on Wednesdays, because UCAD is the only pair that I take correlation into consideration, and UCAD correlates. I can't remember if it's proportionally or inversely to oil. So when crude moves, UCAD moves, and on inventories day, crude can pull UCAD like crazy. So I would say maybe don't, if you're a beginner, don't try and tame either of those. Let's see, what time do I use as a starting time for? No, so I add Oscar. I just add the study at between 4:30 and 5 and it just applies everything. I don't mess with any of the settings. Oh, I think I understand what you're saying. I'll send you. Let me try and capture it in like a screenshot. I understand what you're asking now. Let me capture it in a screenshot and I'll send it over to you sometime this week because I don't plot it every day. But next time I do, I'll grab a screenshot and I'll send it over. And Chris, it's not anything like if you've had good luck with it, right? And it like by all means mark it up. And especially if your demo, try like if your demo, then learn how to, don't be afraid of it. But it's one of especially on Wednesdays with crude inventories, it can be a hard one to trade. The dip on the yen pairs. No, I think the yen pairs had some really good strength yesterday. Or the yen as a whole had some really good strength based around a French president, I think. I don't know. An analysis video of it after market close. I don't pay a whole lot of attention to that type of stuff. Like the dollar yen pair, that was probably impacted by FOMC, but I don't think that the Aussie yen and the euro yen or the pound yen would really have had that drastic of an impact from FOMC. Especially when it's just yesterday's FOMC was just the meeting minutes. It's not the actual FOMC statement. So the additional videos, Navaska, those are going to come out this week. I had recorded some that were pretty much what we were going over now, but I didn't want to release it. I didn't want to release them before this webinar because I didn't want to. It can be a lot of information if you don't have the opportunity to ask questions. So I didn't want to overload anybody, especially where I know that some people are only like halfway through the videos. So I don't want to just throw additional information at people without the ability to ask questions. So I'm going to give people a little bit more time to get through, and maybe tomorrow afternoon or sometime over the weekend, like Saturday, when people have had a chance to sit down and it digests a little bit more, then I'll release it because it's a lot. Especially like it may not seem it as you're going through, but go through it a couple of times and you'll pick up little things every time. So I'm trying to be cognizant of everyone in the group, and I know some people have gone through the content a couple of times already, and then you got people that are on like video 7. So sometime this week or this weekend, the videos will be out. It seems like the questions are slowing down a little bit, which is good and expected. How often do I trade individual stocks? Every week. I've got a running portfolio of stocks, options, futures, forex, Nadex. I trade every single one of them every week, pretty much. But if and only if the opportunities are there, I don't force anything with it because that's the beauty of a portfolio. Like I'm swing trading forex and I'm short-term intraday trading forex and swing trading futures and short-term trading futures, and I've got long-term options for a couple of years down the road, and I've got short-term options for a couple of weeks down the road. So I mean I do a little bit of buy and hold. I do a little bit of do a little bit of everything every week when the opportunities are there. Thank you, Tracy. I appreciate that. No, I don't have any particular favorite time to trade. It's, again, really just when the setups are there. Nebraska, I think so. I don't actually know the plan entirely uh, for the future. I don't know if you follow Sean on like Messenger. I think there's like a new app called My Day or something like that, and Sean's launching a lot of the stuff that he does with his wife Megan on a new website, um, and I'm not entirely sure if it's going to be. I I don't know. I would love to, and I would love to develop like swing trading forex, for instance, is a lot different than than scalping and Nadex and intraday forex and some of the stock stuff and the long-term options. It's something I've always been intrigued by, but forex is the most accessible, and Nadex and futures is the most accessible. So I do ideally have, aspirations to teach that stuff too. But I mean, the other thing is Forex is probably because it's strictly market structure that I'm teaching in this one is the easiest to explain, and this took me like 4 months to put together. So it can become cumbersome. Um, Eventually I'll figure out a way to streamline it. Swing trading is a hold for a really long time. So like when I'm doing markup on the monthly chart and the weekly chart, um, I would say like holding for any length over like 2 weeks is swing trading. Yes, swing trading still uses the same structure. It's just on a higher time frame. So um, kind of what you're doing with intraday trading, right? So let's go back to, so kind of when we first started when we first started today, or tonight, and I think it was Junior asked about using fibs in different directions, right? So for me, right, this is a weekly chart. Um, I had a swing entry off this last test here, and I took it up to the 61.8. So I entered here and I took it off here. So for me, that was 1, 2, 3, 4, 5. Like just on the, in the middle of that fifth week, I took it off. So that would be swing trading. It's just doing what you're doing, just on a larger time frame. But the reason that it's different and the reason that it's its own little educational course is because risk management is hugely important, and picking targets is different, and so it can be more challenging. And identifying the patience and mind, like there would be a whole series around mindset and around preparing yourself to hold for a long time. So we've got 7:41. Any last minute questions that you want to get through? I know this kind of turned into Q&A at the end, but that was good. That's what I wanted. Again, John, no particular time of week that I take Nadex weeklies. I mean, if the setup's there on Monday, I'll take it on a Monday. I prefer not to, but um, I mean, because I don't hold till expiration, then and I trade for, to take profit, then it really doesn't matter. I just trade when the setup's there. And again, if the strike and price combination is right, then you can be in and out of a weekly in 9 hours. Well, thanks, Junior. I appreciate you coming on. So I'll stay on for the last, I'll stay on until 7:45, maybe a little bit longer if there are some questions that trickle through. I realize now that I'm very happy I actually went through this process of saving these off, because when I was trying to showcase what my chart setup looked like throughout the week, I got rid of all of the dollar-yen markup that we had done, or all of the charts that we had saved off. So I'm going to load those back up after we get out here, and maybe sometime tonight I'll try and share those into the Facebook group as a workspace so that you have them as reference. And I will link in this video when the recording registers, and I get a meeting and a reminder from GoToMeeting that it actually completed. I had a brief moment of worry there that I didn't actually start the recording, but I did, and so I can stop recording at any time now. So, any last minute questions before I say goodbye for the night, and then that's a good compliment, John, because YouTube has everything. So thank you. No problem. And I'm looking forward to advancing this stuff. So there's some more advanced concepts with Fibonacci in terms of like high to high Fibonacci and low to low that we can do, and so there's a lot more to cover. And this is just the Chris, I always attribute it to the first time I saw someone's chart that they sent me with all these different colors. It looked like they opened a Skittles package and just jumped it on the screen. I hate cramped charts, and so I'm happy that you will no longer have those. Yeah, fib extensions is something that we'll get into a bit more as we go further down. I want people to grasp the retracements before we get into extensions, but yeah, they're powerful. And we touched on them briefly tonight, but there's more you can do with it. So all right, guys, I'm gonna call it, and I'll have this recording up later tonight or tomorrow. I'll hand it off to Ryan. I don't know if he wants to put it in the put it on the BTG site. Yeah, Dan. So we'll do high to high and low to low. All right, guys, have a great night, and keep the energy up in the group. I'm loving seeing everybody posting. I try and get to as much as I can, and I promise I will continue to do so. And hopefully I'll have the opportunity to do some more video responses. I'm happy that Adam had posted his failed trade. So if you do have questions about failed trades, feel free to post those too. I'm not going to bite. There's no reason why you can't learn from failure. So if you do mess up a trade, or if it goes against you, absolutely post it, and we'll look at it together as we did with as Adam did, and I appreciate everybody else jumping in and trying to help out too. So keep the energy up in the group. It's been great. And I will catch you guys all on the next webinar. I'll be better about posting well ahead of time for the webinar, and I do appreciate everyone not getting on me about canceling and postponing until Thursday. I really do appreciate that. It's been a rough week in terms of time that I had to dedicate to this stuff. So thank you again. I'll catch you guys all later.